To what degree is this a correction from what we've seen in years past, or is it the start of a secular bond bear market?
Oh, well, it's a brilliant question, and the only question really, if you're a fixed income investor, Danny, how far can we go from here? For all of my lifetime, basically, or certainly as long as I've been looking at financial markets, yields have been on that steady run, lower and lower. Central bank rates have come lower and lower. Inflation has been under control. And now, like a jack in the box, we're bursting higher with the inflation. Central banks need to lift those rates aggressively, and that's very damaging for fixed income, for bonds, which have been in that lockdown, in that lock grip all of these years. So the question is, can we get back into that trend? All of those reasons that have been depressing inflation, all of those reasons that have been keeping rates low for so long, are they going to come back, or is this a start of a new era? The people that we're speaking to for the story today are suggesting, maybe this is now a time when we're going to see a sustained period of higher yields, not just for the next year as the likes of the Fed, the ECB try to get inflation back under control, but maybe it's a more permanent fixture in the markets now that we're going to see two-way risk in bonds, in credit, and a lot more fluctuations in price from here on.
And of course, along with these drivers impacting the bond market, we've certainly seen them impacting the yen as well at 140, that key psychological level. At what point do we look at a yen and say, okay, the BOJ is going to do more than verbal intervention. They need to step in. This will become damaging for Japan.
Fascinating again, and no sign yet, really. I mean, the rhetoric that we're getting from the finance ministry, from the Japanese government is still, sudden moves on, good. But nothing more aggressive than that. Nothing kind of like that's raising the ante here for the FX traders. And with the yield gap between Japan and the rest of the world so wide, no wonder that the yen continues to weaken as well. The cash going elsewhere to look for a better yield, basically. But the BOJ, the policymakers, the government all seem reasonably comfortable so long as it's not a short, sharp move into uncharted territory. More drift. We can see the domestic view is that the BOJ said, Kuroda said at Jackson Hole, we're not changing our policy anytime soon, and at the moment everybody's listening to that message and prepared to believe it.